and I have already gone out and bought a private jet. And
yes! Yay! Okay.
stories are just unbelievable. Join Epic Elite, and you too will be having the life of your dreams, traveling to exotic destinations, doing incredible business deals with incredible people. Deanna, thank you for everything you've done to put this together.
Yay! I'm so glad. That's like the best testimonial. Yay!
Did you hit record yet, Dee?
I did, actually. I did. I just want to be on the plane with you, Derek.
Well, come on. There's room. Look, there's a seat.
Deanna, if you would come out of quarantine, then you could be joining us.
I definitely would, for sure.
Very soon. Very soon.
Very soon. I'll be on those planes. Hey, everyone. Welcome. Everyone's joining us. I'm super excited to have everyone today. It is a fun Thursday. We've got a lot going on. So much training today. Such good content that we're going to be sharing with you. Like, I'm so excited about today. Let's give it about 1 more minute so that we can get Mr. Frazier on here. And yeah, we'll get that going. If let's see. Yeah, everyone's jumping in. This is exciting. Most of you, if you were on the previous call with John, just say yes. I just want to see who all was on the same call. I recognize most of your faces. See, there you go. Fantastic. Awesome. Okay, so see, Grant, you have a lot to live up to, my friend. This is exciting. Well, hi, Terry.
Especially after that last presentation. My gosh, that fella has a lot of, John Azaroff, he has a lot of information, a lot of good content. I feel the inner Frankenstein coming out.
I know, he's so good. So glad that we got to have him. And we're super excited to have you here, Grant, as well. So good stuff. Let's see here. All right. So, oh, Terry, I'm still drinking my tea, man. So there's that.
I just ordered 300 more Haynes and Brothers cinnamon teas. I'm so on it. I can't wait to see you in 60 days.
I know. I'm excited. All right. Let's see here. Just got a couple more people jumping in. I see that everyone, yes, you guys were all on there. That's fantastic. Super glad to see everyone. And let's see here. Peter. Hi, Peter. Hi, Brian. Oliver. All right. Good deal. All right. Let's see here. So, Grant, why don't you give us a teaser while we're waiting on Roland to join us of what you're going to be sharing today? Grant, you're muted, my friend.
Thank you very much.
There you go. Now we have you.
Today, this is billed as a stock purchase agreement review, but really what I want to do is use it as an opportunity to talk about important issues that you need to consider when you're acquiring a company. We'll use the stock purchase agreement. We'll go through it. It's it's exciting for me. I hope I can make it as exciting as John's presentation just was. But we'll go through it, and really it'll be a great, hopefully it'll be instructive and helpful guide for everyone to see what they need to be mindful of in transactions. The agreement I'm going to go through with everybody here is for a really, really big deal we did. It was almost $100 million deal. But so it has every conceivable potential clause in it you might run into. There is no way when you're acquiring deals in the space of a couple $100,000 company, or maybe even $1 million or $2, $1 million or two, that you will necessarily encounter all the clauses we'll talk about here today. But hopefully this will be instructive for people to understand what kinds of issues to look at. In addition to going through the deal and the stock purchase agreement, I'm going to talk just a little bit about the setup process and how to prepare for the acquisition when you're going to buy the company, some considerations, what I call creating the catcher's mitt. In other words, once you buy these companies and you aggregate them, how do you want to hold them? Where do you want to hold them? Who should hold them? So we'll talk about some of the issues like that. In addition to any questions people might have. Yeah.
Awesome. And I see that Mr. Frazier has joined us finally. Hi, Roland.
Finally? What the heck with the finally?
No, I'm just giving you a hard time.
I like that. You faded out. Did you say that again?
I said, I know you've been super busy and you just got off of the other call. So we were just basically having Grant share with us what he's going to be sharing with us today. So we're so glad that everyone's here today.
Yeah, I am too. I wanted to, the reason that I was a second late is I was trying something fun and new that I am going to share now. Let's see if I do that and I do that. Let's see what happens. Okay. Okay. Then what you should see now is the stock purchase agreement. Can you see it?
Yes, we can see it.
Fantastic. Okay. So Grant, do you want to kind of run through this? I can scroll along,
Sure.
and then we can talk about.
Do you mind? Would you mind if I took control of the screen here? Would that be okay with you guys?
Yeah.
Okay. Well, then get out.
I just made you a co-host, Grant, and so I love the fact that you just took control over that. So that's awesome. Good job.
Great.
You stopped the fun thing I was going to do, but that's okay.
Oh, really? You didn't get to play with your new toy?
It's not new, but go ahead.
Oh, I'm sorry. Well, so here. Let me get this so that is this right? Let me make sure I'm sharing the right screen. No, that's my email. So this is the exact same agreement that we were just looking at here with Roland. But before we get into the stock purchase agreement, let me just talk generally, if I may, about the big picture, and then.
Let me say one thing, Grant. And if you guys want to follow along, this is one of the agreements that you had in your templates, and I believe this one is agreement number 2. Okay. Go ahead, G.
Yeah, no problem. So one of the things I want to share with everybody before we get started, just to talk a little bit about acquiring a company, and some of the fundamental things that get us up to the moment of the stock purchase agreement. You know, I know Roland, you and I practiced law together for a while. Ever since then, just by way of background for me, I've continued to practice, because Roland mastered it and moved on, but I've continued to practice law in the commercial business area. My firm basically represents businesses and high net worth people. And what we do is help them buy and sell companies, help them move their valuable assets from one place to another, help them coordinate the relationships between the companies because there may be jurisdictional differences, tax differences, whatever it may be, both in the U.S. and throughout at least Europe and some of Asia. So that's generally what we do. I personally have participated in hundreds of millions of M&A projects, purchases and sale on both sides of the company. And as I said before everybody got on, what we're going to show you today is a really enterprise approach to a sale. I don't expect that a lot of the sales that everyone does are going to be necessarily as massive as the one that this was in terms of the amount of processing that is involved. And when we go through the SBA, everything won't necessarily apply to you. But it just is every possibility to give you some ideas of things to look for in a deal. You can probably use this as
yeah, and I was just going to say, we will also be giving you guys short form agreements for smaller deals, but this is cool to go through, and the reason that we wanted you to have these is that whatever you do, this will help you issue spot. One of the big things in law practice is spotting the issues. Because nobody tells you. When you go to law school, they even have a thing called IRAC, and it's where you do issue, you have to spot the issue, then you say what rule applies to the issue, you analyze it and come to a conclusion, and that's how attorneys work. So, so having a familiarity with one of these deals like Grant's talking about that's very complex will help you just absolutely breeze through the easy one, but also you'll be aware of some issues that might be in a particular deal that that you'll not be unfamiliar with. So that's a big help. Go ahead, G.
No, and that's exactly right. This agreement is really somewhat of a checklist. If you had a good stock purchase agreement, I'm going to talk to you about stock purchase and asset purchase and the difference here briefly in a minute. But if you have a good purchase agreement, because they're very much the same, there's some difference between stock purchase agreements and asset purchase agreements for tax reasons. But once you move past that, most of the reps, the warranties, and the mechanics of how you do a purchase are are much the same. And you take one of these agreements when you do your deals and literally page through them, and it is like Roland says, it's really a checklist to help you remember, oh gosh, how do I deal with that? So as we move through the stock purchase agreement, I'll point out the areas or some of the areas that I may think are important things to stop and focus on when we get there. One of the last things I want to say is all of the documents that you're getting through this program, including this agreement, these are the types of agreements that usually expensive seasoned attorneys are drafting and exchanging between each other. And I think that just keep in mind that, much like doing surgery on yourself, you probably can't do it. You probably have to trust in someone else to do that for you. And at some point, I really do recommend, it doesn't have to be me, but it can be, that you find somebody who's knowledgeable in the space of buying companies, who has the experience to, when they're talking with people, and listen critically to the transaction, because at the right time, you may want to have an attorney assist you with perfecting some of these deals. The devil is in the details of these deals, and we're going to go through here in 40 minutes what, many times when we do these deals, we spend hundreds, if not thousands of hours just on the stock purchase agreement, negotiating it down to its nth degree. So keep that in mind. And the reason I say that is when you talk about buying something that's going to be really valuable, that you're going to want to be profitable, you want to make sure it's in good shape. You want to make sure you're getting what you want. And additionally, you want to make sure that you're holding it right. You may not want to buy the stock and hold it in your name. You may not want to hold it in the name of your company. You may not want to own it in your state. You may not want to own it in your jurisdiction. So these are all things to think about when you as you get into the deal. Stock is a lot like ownership of a thing. Let me get a little, whoops. One moment here. And I'm going to share this with you all. Okay, these are grants, excuse me, this is not we'll get there in a minute. Here's our basic corporate and stock owner principles I want you to be mindful of as we go through this, right? Grant says corporations and LLCs are basically the same. People think, well, should I do a corporation? Should I do an LLC? Listen, they're both owned by a group of people who own shares, usually more than one person, right? And they're both ultimately controlled by a management team or a board level. You can call it a board, you can call it a management team, but effectively they serve the same role. The real difference between entities isn't whether I'm an LLC or a corporation. Frankly, LLCs are more favored right now because they're easier to form, less paperwork, less formalities, and they have less restrictions on ownership. For example, foreign citizens can't own certain corporations. LLCs, you can have foreign owners. But the real distinction, the real important distinction, I find when you're buying stock of a company, right, and when you're looking at this company, is it a C company or is it an S company? This is a tax concept. C and S, there aren't really C and S corporations. There's corporations that make an election to be taxed as a C corporation or taxed as an S corporation. So what's the difference? I know some of you know, but I want to make sure I cover it real quickly. If you own an S corporation or an LLC it's the same. It's what we call pass-through for tax purposes. Whatever the ultimate profit of that or loss, hopefully it's a profit, whatever the ultimate profit or loss of that entity is to you or to that company comes straight across to you as the owner on your tax return. And so the entity really just files a tax return that says, hey, look, go see Grant for the money because we pass through all the profit or loss up through him. So we call that pass-through for tax purposes. An S corporation is pass-through for corporation. LLCs out of the box are presumed pass-through for tax purposes. However, just like you can have a C corp, which is not pass-through, that's right. When it makes its profit, that corporation pays that profit right there at the corporate level before it distributes out to the shareholders, you, the owner. And why would anyone ever want to have a double taxation? There's a lot of good reasons. Most big companies are C corporations. I'd suggest as you begin to hold more and more valuable assets, and as long as you don't need all the money you make every year, if you're retaining profits and having profits that go beyond what you or you need for your operations, I think you'll find a lot of value in a C corporation. Remember,
hey Grant,
C corporation,
what Why do you think that is? Why do you think that most that LLCs and LPs and other entities generally fall by the wayside as companies get bigger?
Well, they don't. And here, let me get continue to share, and I'll show you why. This is you can see that structure, right?
Yep.
Right, see this? Okay, so here's just a really simple structure. You have a company. It might own some companies under it. Well, we don't want to have, every time any of these particular companies on the bottom, any of these profit centers generate a profit, we don't necessarily want to pay tax at every corporate level before we come up here to the ultimate owner, right? And you're going to be the ultimate owner above that. Of course, we don't want to do that. So what we'll find typically is you'll have a company near the top that is the C entity, and we'll find that these lower entities are going to be passed through. So you may have a holding company, let's say it's in a very favored tax jurisdiction like Nevada, where you could have a 21% corporate rate effectively, right? Versus out here in California, where we're effectively, paying 48% of every dollar we make if we make a profit, and you're in a high enough tax bracket, which means if you make any money at all. So a lot of times you'll want to have these lower rung entities pass through up to your C corporation. And I don't know if that really answered your question, but that's why we have more pass-through entities generally than we do C corporations. Usually you only use a C corporation once or twice in your structure, depending on how big you are. So let me stop the share here for a second. So that's I really want to emphasize that all of you out there who are buying companies, who are out there buying companies, that it's very important to have your catcher's mitt ready. Don't think a little bit, talk with your tax advisors about, when I do buy these stocks, how am I going to hold them? Do I really want to hold them? Does my family structure want to own them? What jurisdiction am I going to be in? And look carefully at those, because, folks, you spend all the time, and you're on courses like this, trying to find a way to gain that advantage, trying a way to make some extra money. And then when you get companies, I see all of you as entrepreneurs killing yourselves trying to, wrench another 1, 2, 3, 4, 5% profit out of the bottom line of a company. Sometimes you will miss the opportunity to make that extra 1, 2, 3, 4, 5% out of the company by having missed the opportunity to properly think about how you're holding, and you're doing basically tax planning is what I'm talking about once you have the acquisitions. Because you acquire one company, and then two companies, and then three companies, you'll find your tax situation gets more complex, and there's lots of opportunities to lose money and, frankly, to make it. So that's some of the precatory comments that I wanted to make. The concept of stock, I want to make sure everybody's comfortable with the concept of stock. Concept of stock is just like, very, very similar conceptually to when you have, when you buy your house, right? You got your house. How do you hold that house? You hold that house by a title, a deed. Same thing if your cars, your planes, whatever it may be, things that you own by having a piece of paper that says you own it. And stock is no different. It is just your title that you have in that corporation. And so once you get that title, as you know, a company has shares of stock. It may have 100 shares of stock. It may have 1 million shares of stock. If you own all 100 shares of stock, then you're the 100% owner of that company. But there's also different classes of stock. And that's when you go out, and let's go back to my little share here. Excuse me one moment. When we're going out to when we're looking at the I gotta hit share. There we go. I apologize. When you're looking at the fact that you have stock or a membership unit. Remember I said corporations and LLCs are really the same. They are, right? Corporations have stock, and the LLCs have their membership units, right? Corporations have board of directors. LLCs have the managing member or a managing member committee. All, to me, arose by any other name. I don't understand why they have to make it so hard. But what you get once you have that piece of stock or that membership unit, what you effectively get is a right to vote. You can vote your shares. and you have a right to receive payment on certain terms. This is very important. When you go to buy, when you're buying stock of a company, if you're getting it all, that's great. If you're buying certain classes of a company, that's great. Or if you're eventually selling at some point stock, be mindful of the different classes or membership units that they determine how and when you get paid. You know, if the preferred shares usually get paid before the common shares. And that's important to know that if you're ever investing in a company, I know we're here talking about purchasing, but I wanted to touch on that. In any event, your shareholder or your membership agreement, your operating agreement should set forth the exact manner for voting and how you get paid. Okay, I know that's a lot of wind up before the SPA, but I thought that was going to be something that would be helpful to go ahead.
Yeah, and just so you guys know, he's referring to SPA, not like the SBA, Small Business Administration. SPA is stock purchase agreement. That's what we're going over. So just to keep things clear on the acronyms. Yeah,
that's right. So again, we are also providing you, or Roland is also providing you, an asset purchase agreement. It would track very closely with what we're going to do here today. I sent one of those over to Roland today, so I'm sure he'll make it available to you at some point. But let's just go through the stock purchase agreement, because that is a very, as common. People have asked me, what is more common, the asset or the stock purchase agreement? And, as a buyer, you typically want to buy assets. Why would you want to buy assets and not stocks, right? Well, the answer is, if I buy the stock, I get the whole company. I get your employment lawsuits, I get the class action lawsuits, I get whatever liabilities may be out there that you're not telling me about. But if I buy just the assets out of the company, right, then I have an asset that I can depreciate, and I don't have any of those liabilities. I can go drop those assets in a new entity. Well, sometimes you just can't buy the assets. Sometimes you have to buy the stocks. It is generally more excuse me. It is generally more tax advantageous for a seller to sell stock. It's generally more tax advantageous for the buyer to buy assets. So as you go out and look at your deals, when people say, yes, I'd like to sell my company, there may be an opportunity at the end. Once they agree that once you agree to a certain number, there may be an opportunity to buy just the assets and not their stock. And as long as they get their number, that could be a win-win for you all. All right. Let me share this screen. Okay, so here we are. This is a long agreement. I could easily stop and would be happy to if Roland would ever want me to bore you enough to do it and talk about almost any component of this for a long time. There are classes that lawyers take just on different sections of this agreement that you're about to see. And we're going to, just so you guys know, so we don't overwhelm you, not only are we going to kind of skim through the most important issues, but we're breaking this into as many of these bonus calls as we need to get you through it and to answer your questions. This one, we've got about 25 more minutes on this call to do this, so it won't be overwhelming because it is a lot of information. You don't need to know this. So this is for overachievers, but it is good, just like as a digital marketer or a business person, it's good to know a little bit about everything. And one of Grant's sayings that I have stolen and give him credit for, although maybe I'm not going to do that after this. This will be the last time, Grant, I'm going to give you credit for this, is he says, I'm an ocean of knowledge an inch deep. And it's very good to be an ocean of knowledge an inch deep, because then you have, I see Terry laughing. Then you have a basic understanding of what your attorneys are doing. So if you don't see them thinking about these things that he's going to talk about, then, maybe you need a different attorney, or maybe you need to drill down, but it's just good to know. So that's Grant's and my intro into this. So for the next 20 minutes, you're going to get a little bit more technically in-depth info than you're used to. Yes, well, but it's all worth it, right? Because at the end of the day, you get all that cash, right, when it all pays off. So is that a guarantee, Grant, that you're making for everybody? Yeah, that's our earnings guarantee. That much money, if you can count it, you get it. So, all right. So, talking about the stock purchase agreement here, let me get it right where I can see it right in front of me. Apologize. There we go. Okay. I gotta get you guys out of my way here. All right. So notice here, right at the top of this, right in this agreement here, the watermark in the back saying this is a draft, strictly private, confidential, discussion purposes only. Again, on some of these deals, people they get far enough along in a deal where they feel like they're committed to this deal, they want to do the deal, and something happens where you have to pull out of the deal because you're the buyer here, and you want to, from the LOI on, you really want to, we got to talk about the LOI real quick. We didn't do that. From the LOI on, you really want to make sure that you as the buyer have the right to get out of this deal if you learn something that you think is improvident. Let's just really, I want to talk about the LOI real quick. Now, we did a short session on the LOI before, but I just want to touch it out because your letter of intent, your LOI, the short 2 to 3 page agreement that usually precedes the final documentation, which is hundreds of pages sometimes, is so foundationally important to your stock purchase agreement. If you don't have it in the LOI, a lot of times you won't get it later. And so some important contents, and I put here, is when you're the buyer, you want to make sure you have the right buyer in there. You don't want to be changing who the buyer is later because you figure out it's more tax advantageous for you to structure your affairs a different way. That will spook sellers sometime. So be careful and know who your buyer is, meaning you, what entity and how you're going to do it, how you're going to hold it. We talked about that. Know about that. You're going to want to know that for tax purposes for the company and for yourself. Sometimes you have asset protection reasons. You may not want to own everything. Rich people get sued. Sometimes when you know you're going to be giving your assets to your kids, your family, your loved ones, you may want to start a structure that lets them hold some of these things independent of you so that you, whatever you may do, never exposes them to what you've earned. Keep your powder dry. We form entities all over the place to keep separateness for liability. Why, once you have enough money or more money than you need and you're giving some away or your kids are going to have it, why wouldn't you begin structuring it into their separate estates so that, God forbid, something bad happened to your business? Look what the coronavirus did, right? All right? There's no bars, no restaurants, no movie theaters. You get to be home all the time with your family, right? Liquor stores are closed and all the weed shops are open. All that in just 60 days. So the world changes and your business can change. I've seen businesses fall apart for amazing reasons that no one ever thought would come. And so, again, think about how you hold this stuff and when you hold it is super important. All right, on the LOI, price is, of course, important. What's being sold? Are we doing stock or assets? How long is the process going to take? A typical sale purchase process is good to get done in 30 to 90 days if you can. Otherwise, it tends to get stinky both on the buyer and the seller side. You're going to want to describe, if there's going to be diligence, how that process is going to work generally and who's going to be responsible for it. And I like, on the buy side for you guys, I like to have a description of the performance of the business generally up to this point. It's been $1 million business operating in 4 countries and awards and whatever it is that they're bragging about. I like to put that in the LOI. So if it turns out not to be true or there's a problem, it helps you negotiate down the price later. So any of their important representations I get in there, a lot of times if you're on the buy side, they're going to want some exclusivity. You're going to want exclusivity so they're not out shopping your deal to someone else. And you really want to pin them down, sometimes with a penalty clause if they get caught, dating another girl or guy, whatever the case may be. Confidentiality is not uncommon. And then, yes, you'll have some kind of NDA. Grant, yes.
Is they're only seeing the one slide. Should they be seeing anything else?
I'm sorry, what were they not seeing my Word document there?
No.
Let me just share that with you really quickly then, because I was reading from it.
Sorry.
I'm glad. Thank you for telling me. Can everyone see this?
Yes. There we go.
So, who the buyer is? How am I holding it? I just talked all about that, right? What's the price? Is this cash? Is it terms? Is it stock? Is it an earnout? Is it an escrow? Again, if you don't get it in the LOI, we had an LOI class. I know it can be replayed where we actually go through the letter of intent. We did this last week. So I know you guys know to get it, or ask Deanna to get there to go through this in detail, but these are the important parts. the process, how are we going to terminate it? Is there a penalty? The due diligence, all the things I just said. But these are some important things that really set up, really, if you will, it's the bones of the stock purchase agreement, because it will be tough to get some of these things later if you're going to, especially in terms of the money and in terms of the earnout. But some people negotiate and will try to surprise you with stuff later, but it doesn't always work with a sophisticated purchaser. All right, we want to head to the dive right into the document now. Let me share this with you all. Share screen, and there it is. Okay. Are we seeing the stock purchase agreement, I hope? It looks
yes,
like
sir.
It's green, great. Now, as we move down, obviously there's a table of contents. This is a great sub-checklist of what we're going to be talking about here today. I think everybody's read a table of contents, but you can get a sense of the level of detail that, from looking at it, that is required to really perfect a deal. Again, the devil is in the details, and there's a lot of boxes to check, especially if the companies have any level of sophistication. All right, here's the agreement. Generally, we're going to talk about who are the parties. I've already now talked twice about how important it is for you as the buyer to know what your catch remit is, where you're going to hold this entity, how it's going to fit into your structure for your personal and tax purposes. Generally, in an agreement, there's a section called recitals. This just is otherwise known as background, right? Hey, we own this many shares, subject to terms. We want to have a rollover agreement. This particular document called for a rollover agreement where I believe the sellers were going to retain some shares through a rollover agreement. This next section of the document I was going to spend a little time with, and then we'll really speed up, is the definition sections. The definition section is, when we say the devil's in the details, the devil many times lives here in the definition sections. And you can see, and again, you'll have this document so you can play with it on your own, but you can see as we go through it, all kinds of things get...
Hey, Grant, your slides are stuck.
I apologize.
Yeah, your slides are stuck on the first slide that you presented it. We're not seeing all the rest of it.
All right, let me see. Why are you not seeing?
It's just, it's showing the first one.
I see. Okay, let me move you guys up.
There you go.
This? Oh my God. Learn how to use Zoom, dummy. Okay. Very fine. Well, then you're
Grant, Grant, now we just see a picture of your kids.
Stop it.
Hey, John Asseroff said, no bad self-talk. You're not a dummy.
All right.
There
So
you
here
go.
Here
Don't
again is the table of contents. Again, there's extreme detail in it because reflective of the detail we will see in the agreement that's coming up. Very important, as I said, come on, Grant. Knowing who the seller is vitally important. Here is the recital section. The recital section tells us generally what has taken place. This is a rather short one. You'd be surprised. Recitals will go on for days and days saying, and a lot of times people are trying to use people to pin them down to make sure that they're getting what they're asking for. Now you said this company is great and you're top 10 of this and you have the #1 formula and the #1 sales in this territory. A lot of times you'll want to reflect that there just to emphasize what you think you're buying. The definition sections I was talking about, the devil's in the details. Interesting, like you have to define a word just like cash, right? Everybody knows what cash is, right? But there actually is a definition of it. A lot of times companies are going concerns, and you're going to sell a company as it's having daily sales and buying and selling inventory, and it's tough to capture that exact moment of when the sale is. And so we have to define carefully what the cash and assets of the company are. And so you'll be surprised how many definitions of cash there can be. Certain expenses apply to closing, certain expenses don't. When you buy the company, you're going to want to talk about that sort of thing because you're going to find there are transactional expenses that are involved with buying companies, and you're going to want to allocate who is responsible for that. Company consents. The companies many times, if you're going to buy a company and move into their operation and they have a landlord, you might have to get a consent of a landlord. You might have to get a consent of another shareholder. Many times, and this is a big one, folks, if you're buying a company with debt and there's a bank or some third party with debt, there's going to be major control of company terms, meaning that if the company gets sold or major part of the ownership is transferred, you have to get the consent of who that lender is because they want to know who they're doing business with. Again, I'll just go through here and tap on the ones that are that I think are worthy of saying something. Many deals have an escrow. That is where if you buy the company for a certain amount or you're from someone, you're buying it for, let's say, $10 million, you might want to hold back $1 million or more, as much as you can, because you will be surprised how many, after the deal closes, how many liabilities arise or claims come up with deals. And so an escrow is an important part of a transaction to be mindful of. And then there'll be an escrow agreement. I'm going to speed up my zooming through here. There's definition of what the intellectual property of the company is. Of course, you guys know, especially in the technology age, if you're buying a company, you want to make sure you get all the IP. And so you want a nice broad definition of what that intellectual property is. You would now have one from this agreement. Be careful if you're buying this reference here to open source software and software in general. If you're buying a company that does have a programming, make sure you do a lot of due diligence if they wrote their own program on who created it, and be clear that you have all the assignments that are necessary so that you're going to own that software. It really sucks to buy a company and then find out later someone's claiming they own some or all of the software. You notice we even define what a person is, just in case you don't know what a person is. But it's obviously more than just a human being. It can be the companies that are involved in the transaction or related to the transaction. Now, we're not even through the definitions parts, right? We're down to S's, but you can see, as I said, there's a lot of care that's taken to defining every part of the transaction, and you should be careful too and not rush through your transactions, even if they're smaller, to make sure that you're on the same page. And when you do your agreement, define the important parts of the agreement. Notice this agreement even has an interpretive matters clause, right? And the purpose is just as it says, it helps us do certain calculations that are required at the end of the transaction to true it up. You're going to find as we get here shortly, we have a gender clause. That's my favorite, really. You're going to find when we get here shortly, here we are in the purchase and sale and rollover portion, that a large portion of this agreement is allocated to just that point of making sure you get just what you're buying and the right amount of cash and inventory are in the building, in the particular business. We've talked about the shares. It is important to make sure if it's a corporation you're buying that it's shares, and an LLC it's the membership units. And it's very important also to make sure you're getting all the shares. And notice this part here, free and clear of all liens. That little phrase in this whole large agreement is the subject of a lot of litigation. You want to make sure when you're buying the shares from Joe, that Joe wasn't married 2 years ago to Sally, and they have a marital settlement agreement that says she has a lien or an interest in these shares that he's not disclosing to you, because you don't want to be dealing with Sally or Joe or whoever it may be on the other side of this transaction. So the warranties, and much like doing a title report on a real property, the warranties that you own the shares you say you do are a key part of making sure that that you're getting all the shares and all the shares free of liens is a key part of doing proper diligence in any deal. Closing. This is a super important part of the transaction, and you would think sophisticated lawyers would never have any trouble with a closing that is 60 or 90 days out, but it is almost always the case that a couple days before the closing, we're hustling to complete some element of the transaction that is required before we can close. You always want to define the closing. You want to have an effective date of when you're the owner now of the company and when they're no longer the owner. And you want to have, as we get in here, a clear statement of what you're getting on that closing. Here we move into this calculation of equity value. This is, for purposes of this call here today, I just want to tell you there's going to be a whole section even if it's a small section in a small deal, but there's usually going to be a section for any business that's a going concern, so that when I, as the buyer, get the actual amount of money, and here we are, payments at closing, when I, as the buyer, am actually getting the company, I want to know that a certain amount of inventory is in the warehouse and that there's a certain amount of cash in the bank. Well, inventory and cash are always fluctuating, right? And so there's a big part of this agreement that is simply, for purposes of this call, a formula, so that at a point after the closing, maybe 30, 60, 90 days, we do a true up. When we are able to look back and say what was actually in the company, we calculate what the delta is there in either cash or the inventory, and then there'll be a true up payment. Maybe that will come out of that escrow that you have. So this whole section of the agreement really deals with that concept. And here now you see we're in the escrow section. This talks about how the escrow was going to work in this particular case. I'm going to speed this up a little bit. There's a warranty here at 2.8 that you don't own the shares anymore. What to do in case of lost certificates. Here's the required cash as of closing. A lot of times when you close a deal, you say, look, I'm buying this company and I expect there to be $100,000 in your bank account because of the ongoing expenses or payroll or whatever it may be. So right here at 2.10, this is an example of how we peg how much is left in the company. Remember, don't just go out and buy somebody's company. You're buying a going concern. Look at all the elements that are required to operate that company, the key personnel. If you have key men, key women, key relationships, key vendors, you want to go out before you close this deal and obtain a relationship so that you know on the other side of this deal, you're going to have that relationship. You don't want to buy the company and then have the key person, the best salesman there, quit the next day and go somewhere else. Because I'll find a lot of, in many companies, the product's important, but also the management and the people are as important in terms of making the company, the enterprise value of the company. So, again, this isn't really in the SBA here. You're going to see employment agreements are going to be referred to, because a lot of times you're going to want pre-signed employment agreements with the current employees and staff of the company before you close this deal. Nobody wants to, buy a sinking ship, and you'd be surprised how many times the prospect of a sale of the company spooks the employees in the company. I guess I understand why. It's the uncertainty. Many times it's a stronger buyer or seller coming in. Sometimes it's a competitor and they already have their internal accounting or they already have their internal sales guy. And so that uncertainty will make people go look for a new job. So keep your the knowledge of the acquisition confidential on the seller side. And if you're the buyer, help them keep it confidential, because you don't want to spook off the talent that may be there. I digress. Let's go back to the agreement here. This is talking about the shares, brokers, and financials. We're getting into the warranties here. A lot of the warranties, in fact, I think this is the warranty section. Let me go up and make sure that is exact. Okay, it is. See, it's Article 3. This is important for you as the buyer. You want to get as many warranties as you can from the seller, right? You want to make sure you're getting what you're buying. And you're saying in here, number one, that you have the authority to do this deal. The organization's given the authority. And we're saying that there's no conflicts here, that we own the shares. There's no proceeding that would prohibit the sale of the shares. And then representations regarding the company itself, that it's in good standing, that it has internally granted the authority versus the ownership, which is what we just talked about. Internally, the authority is there. There's no conflicts or what are conflicts? What are some examples? Well, what if you're buying the company to merge it with another company you have, but this current company has an agreement with some vendor or supplier or other partner that says you can't sell to a competitor, or it says create some restriction on that that would be a problem for this sale. So that would be an example of a conflict that might arise. So you want to review, when we're the buyers, we want to always review all of the important contracts that the seller's company has to see, are there any terms in those contracts that might interfere with the plans we have for the target acquisition. Capitalization, this talks about the money the company has, whether or not there's subsidiaries. all the names the company's ever used, that the corporate records are in good shape, the financial statements are in good shape. We'll skip over this part. It's just that, that you've paid your taxes, that you filed your taxes, that the taxes, these things are super important. Again, aside from employees, the number one issue I see on the other side of a sale where there's a problem, somebody comes along and claims to own either the stock or the IP of the company that just sold, right? Some straggler, or there's a tax problem out there. And this is especially true if the companies are in foreign jurisdictions. Those foreign jurisdictions, they operate differently, and you really want to be careful that you have good tax clearances when it comes to the taxes of the company. Notice how much is just really on the taxes. There'll be disclosures regarding the real property if there is real property involved, tangible personal property. For all of you who don't know, there's only two types of property. Well, there's three types, I guess, really, right? You got your real property, your intellectual property, and personal property. So personal property is everything that's not intellectual property or real property. And so, if there's whatever it may be equipment, it may be equipment in the manufacturing equipment, it may be who knows what kind of real property, but you want to make sure you have a schedule of what that real property is. Likewise, there's going to need to be a schedule of what the intellectual property is. And you can see the company IP contracts are contemplated here because usually when you have licenses, when you're buying a company, let's say it's a SaaS. Let's say you're buying a SaaS company and they're hosted somewhere, or they're using some kind of software in their network that runs your SaaS and you're selling it. Well, many times these companies that are providing these licenses to these technology companies have a restriction on the sale. They want to, again, know who their client is and be licensing to a certain person. I had a very large accounting SaaS contract that almost didn't go through because we needed the permission of Intuit, who was one of the vendors, one of the important licensing vendors. We need to get that consent, and we need to make sure that that contract was in order, or that sale wouldn't go through. And we had to go beg into Intuit, and I think we had to pay them a little more money. There's a contemplation here on trade secrets. It's really important if your company is one that doesn't really have, you don't have a piece of software, or you don't have some patented technology, but what you've really got are great ways of developing great content, whatever it may be that you're selling, or great products, and there's trade secrets involved in those. You want to define, if you're buying that company, what those trade secrets are, making sure that the people who have those trade secrets own them and that they can transfer them, because if they haven't kept them secret, it's not a secret. If they haven't, there's a statute, the Uniform Trade Secret Act, and you have to follow that act carefully to be able to protect your trade secrets in a way that even allows you to sell them. And so this section here is dealing with, hopefully, trade secrets that if they exist, they're going to get. Publicity, and again, these are all the warranties of the company. It's saying it has all the rights. It has its trade secrets. It owns its software. Its IT security is in good position. Privacy policies, people, right? Everybody knows GDPR and all of that is coming our way. You're going to have some warranties that you're going to want to buy. When you're buying companies that have been out there advertising, unless you're buying just the assets, if you're buying the stock, as we are in this example, there's another example of liability that the plaintiff's lawyers are just lining up for these violation of these privacy policy statutes. So you're going to want some good warranties that they follow them so that they indemnify you for that on the backside. All right, this talks about the important company contracts. Notice that we want to see what all those contracts are. We're saying here you've given them to us and they're all in good shape. Your employee benefit plans are all in good shape. I see we're running on time, so I'm speeding up here a little. Whoops, let's see.
Well, remember, Grant, we can do it another time. We got about two more minutes.
Okay, well then maybe I'll break off here just to say that in addition to, we really did hit a lot of the major points there at the top. All these warranties, let me just say this, all the warranties that you're making, they're going to require you to say that everything's fine, all the banking's fine, the employees are fine, everybody's fine, and then you're required, the seller is required, and you want to require the seller to do this, to give you a warranty disclosure statement. And that's the thing that says everything's true in the stock purchase agreement except the following. we did have a lawsuit, and I do have a freckle on my left cheek, and there was a claim to the IP once, but we cleared it up. And you're going to want to make sure the seller gives you the most complete warranty disclosure statement that takes all these warranties away. So once you've got the money, once you know what you're getting, once the disclosure statement's in, that really, there's a lot of details, again, we can cover, but that really is the essence of what a stock purchase agreement is. And again, I think you'll find this agreement to be a great checklist of ideas to give you ideas to ask questions on a company that you may acquire. So
awesome.
There's 2 minutes. Is there a question or two that we can fit in, or how do you want
We actually, Grant, we've got to hop off because we have another call scheduled. But I think what we can do is if you guys will post your questions in the Facebook group, we're happy to answer there. And we are going to do another call. So Deanna will go through and save the chat log, and we can also address your questions, because I think going through the agreement is really helpful first. And as you're thinking of things, we put your questions down, then we'll go back through and answer your questions. Actually, I think that's the best way to do it on the next call. So we'll save this chat log, and then as we finish the agreement next time, we will take those questions. And if we don't get through them all next time, we'll do another one. So we got you guys covered. Grant, thank you, man, so much. I really appreciate you being here and helping out. So claps to Grant. And love that. And we will see you guys. Deanna, what is next for Elite folks?
So Elite, you guys have got an email. I also added y'all to the main calendar so that you guys can see all the upcoming Elite calls that are just for you guys. Also, just know that right now is at 1 o'clock in 10 minutes. We have the call with Chris Daigle going on. So make sure that you get on that link. So 1 o'clock call with Chris Daigle. And then if you are in groups 3 and 4, we have group 3 and 4 calls with Adam this afternoon at 2:30 and 4:15. And we have the groups 3 and 4 going on with Chris Daigle at 2:30 and at 3:30. So a lot of fun stuff going on today. We're super excited to have everyone. And again, Grant, thank you so much. Everyone give Grant some love. Thank you for everything today. And so you guys, will see you on the call with Chris at 1 o'clock. See you guys later.
Thanks, everybody.